Trading investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good. Billy Ray, feeling good, Lewis. We're going to start out looking at natural gas today, folks, because we just hit a very, very important spot here. We had this listed in the newsletter this past weekend. We went down to 251. Boy, that's it. It can't go any lower than that. It's already rallied 10 cents this morning, which is a big surprise. But anyway, that's very, very important that crude oil to not go below 240, because if it does, it can go to 190 without any trouble at all. That's the main thing. Now, we've got another market that is really in focus today, and whether it's going to happen or not, I don't know. I'm going to share it here with you here for just a second. And it's basically the bonds, folks. I'm going to bring this up here and show you the TLT. Hold on one second. By the way, I'm doing a afternoon gig today for the Denver Trading Group, DTG, Denver Trading Group. That's at 2:30 p.m. today. It's a little webinar that I do for them every 4 or 5 years. Ron Rossaway happens to be a very dear friend and has some great stuff. But anyway, you'll notice here, this is the, see where the 61% retracement hit? That was that big volume day. We went from 138 up to 143, and we have collapsed down to this, to the 130, 133 level. But there is trouble in River City, boys and girls, for the shorts, in my opinion. So let's take a quick look at it. I've just blown this up. This is the TLT here. We'll do the bonds next, but I'm going to do the TLT. You know, one of my favorite patterns, of course, is the three drive pattern. Here we have the 1.618 expansion here at 132.71 today. You don't have to risk more than one American dollar on that one, boys and girls. That's all I can tell you. It's either got a hold or it doesn't got a hold, one of the two. But if we take a look at the big daddy rabbit of the futures markets, which happens to be the Treasury bond market, we're going to see something that is very, very interesting. If you take a look at this, this is a 4-hour chart, going back over the last 10 days or so, actually the last month, and there is a B, C, D, three drive to a top-bottom pattern extending down here to a price level of 153.05, and the low today was 153.07. So it looks like this could be a possible bottom here, folks. This is the first time we've seen this in this whole way down. I mean, we've been bearish the whole way, and this is the first time we've got a really, really clear pattern. I mean, that's as clear as can be. The only thing that it lacks is perfect symmetry in the CD leg in time, but the CD leg in price is correct. Everything else is right. You've got a smaller 382 pattern in there between the 13th and the 16th. It measures down to the same area, so your risk here is very, very small. So I don't know what the low was in the TLT this morning, but would one of you kind folks tell me what the 382 is looking at? It's going on. Marshall, it's actually way below the 61% on the weekly, Bubba, because of the fact that the darn thing has, they do use different, let's get this up here and I'll show Marshall what I'm talking about. You're probably right, but on a continuation basis, it's already below it. You see, that's the main thing of what we're looking at, because it really stopped at 56 is where the 61% retracement was supposed to do it, but we went through there like it didn't even exist. But this is a very valid pattern down here. I don't know. I would take a little guess. I think we would be oversold in the bonds. I don't know. Would someone be kind enough to tell me what that low was in the TLT today so far? Was it anywhere near that number we were looking at? That would be very important, because I can't get that as I'm doing the show. Can't walk and chew gum. 132.71. Let me know what that was. I'd like to know if it hit it, or if it's actually very close. That would really be helpful to me if someone lets me know where the low was. 133.19. That's been the low. Well, that's 132.71. That's about 40 cents away. That's pretty close. The bonds hit it. I know the bonds hit it spot on. So we're going to find out whether that means anything. And we're seeing a big rotation in the market, folks. The S&P made a new high and then gave up all of it and, broke down and has rallied back. And the Dow Jones is running the show today because it's made a new high. It's actually made a new high today. So I don't know what's going to happen. All I know is there's going to be some interesting things happening as we go through here. We have another market that has completed an objective. If you remember here, when we started the week, we were suggesting that we were going to come down to the 162 level in the crude oil based on this 4-hour chart. The low today has been, let's get the shorter term version up because this is the one we were saying that we should have a pretty good chance of reaching this level, and that is the crude oil. We'll get this up looking at the hourly chart. That's why you want to look at the daily and then look at the 4-hour or the hourly to get your better price. And we were looking for a price to come in around 61.81. The low was 61.61, and we're now trading above 62 by just a little bit. But that does complete that ABC Gartley pattern, and so that should be pretty strong support, and we should get a little bounce off of it from that level. Okay, now I wanted to mention something else here to take a look at it. Hold on one second here. Hold on. Just a minute. Gee, I hope. Okay, hold on. There is an ABCD there, possibly straight on. Marshall, you're absolutely correct. There is no ifs, ands, or buts. It's right on the old money to take a look at it. Okay, now we've covered the bonds and we've covered that. Now we've got one other one. We look at all these three. I just wanted to tell you about the 382 pattern. I showed you this before, but this is the one from when the whole world was coming apart on March 23rd of 2020. That was basically the end of the election for Mr. Trump. And you had the ABCD there, and boom, that was the COVID virus, the bottom, and boom, and then away it went to the upside. And so that was something that needs to be remembered because those ABCD patterns don't always work, but when they do, they work very, very well. We've got another one here that's not working so well this morning, and that is the little hoggies. Let's get this up here if I can. Oh, shucks, I got to get the darn thing. This is not the right price, but let me get it up here because the price in the hogs, let me get it up here. In the April hogs came in at 153.75 was the number, and it's trading at 153.75. I've got bonds on my mind, as Mr. Glenn Campbell would say. Now, the actual price on those hogs was 93.57, and we're trading at 94. So it's out about $200. But remember, the stop on that was just a penny. So if you lose a penny, you lose $400. There's nothing else you can do about it because that's when these patterns fail, they can go a long way. That's why if these bonds get below 153.05, holy moly guacamole, the next level of any support is at 149. Now they are bearish. There's no question about it. We'll get back to that. Tim Boss is our guest today. Financial Cycles Weekly. We'll be right back.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. I wanted to bring up a chart of ADA. That's Cardano. Back about 5-6 months ago when we did our live trading all-day thing, I recommended looking at the chart. We were at a 61% retracement on ADA. I believe it was only 6 cents. And so at 6 cents, I said, well, if you buy 1,000 shares for $60, it might turn out to do something. So why don't you multiply 1,000 times 60 cents and see where it's at? Because it's trading at $1.44 today, which is pretty nice. If you'd have bought more than $1.20, you might have made some serious money. I don't know anything about these cryptocurrency folks, whether they're good or not. All I know is they're moving like heck. They're in the news, and so I'm doing the charting on them to see what's happening. That's it. This was flat out bland hog picking up an acorn on this one. I have no idea what I was doing other than the fact that the risk was 60 cents. Anyway, that doesn't mean anything in the long run, but the patterns are what's important. We've been asked to take a look at the euro. I'm unable to bring that euro up right now because I've got Tim coming on the show quite soon. But what I will do is during the break between now and when Tim comes on, I will post a chart of the euro because we had an explosive move yesterday, folks. We went right down to our level at 1980, and it just exploded way, we went way above 120 pips, and then it's backed off a little bit. We've locked in a profit in that so that the profit is going to be at least $400, and that's what we're trying to do as we look at some of these things, over the evening. Another request that we had last night from one of our listeners was to take a look at the copper, and Dr. Copper, of course, has been in a heck of a run. We've been in the area here now in copper where we have seen the 61% retracement of this whole move that topped back on February the 24th. You can see we had that really nice 135 pattern that led to a Gartley down to the 396 that had 20 points, 20 cents in it in copper, which is $5,000. Then it went up, and now it's touched the 61% retracement 3 times in a row. The only way this is going to be bullish, folks, is if we can get copper above the 426 a pound level, and then it will retain its bullishness. But right now, we're against some real serious support here, or excuse me, resistance at that 417, 418 level, because that is the 61% retracement. So that's all these numbers are, folks. They're telling you that there are buyers coming in or sellers coming in. That's why technical analysis is so good, because all you have to do is to see if the prices are going up, there's more buyers. If prices are going down, there's more sellers. That's pretty much what you're doing. I did a gig for the Money Show out of Florida recently, and one of the people in the was one of our guests. He said he didn't believe in technical analysis, and so we did a little bit of live trading. It happened to be one of those nice days where you had a really nice move in something. In fact, it was Apple, and we'll bring this up here. I think this is one that very interesting here, because this is where we were coming into yesterday before the Fed acted. We went from 127 all the way down to 121, which was a perfect 61% retracement at that point, and it was also a 135 pattern. And I guess since the Fed came out, the market rallied up quite a bit from that level. Whether it's given it back or not, I'm not really sure, but we'll be very, very careful of this. Also, folks, be extremely careful on the bonds, because this thing has been in a absolute free fall. I mean, we've seen it over and over again that we've not given a buy signal in bonds, and today's the first one. This is the first time we've given a buy signal in the bonds since these puppies started down, and they've been going down for quite some time. Let me get because the notes are the ones for the TLT. We want to take a look at that. You'll be able to see here, folks, on the TLT. Now, this TLT, we've been following this now. This is a daily chart, and we've been following it for a very, very long time, and you can see where we are now. We're right there. I mean, this is it. This is where the fat lady sings. And if you look at that really close on the daily, on the far right there, look at the last days, you'll be able to see that 3 drive forming, and guess what? This is where it is. So, if you believe in it, then that's it. You can see the 135 pattern on the upside when it was at 139. I mean, that's when it started to be bearish. And when it went below the 176 at that 135 level, that's it. So I don't know if it's going to work or not, but this is a pattern. It's a 3 drive pattern. It's got a probability of better than 80%. But the problem is it's that other 20% that you got to worry about. So you don't want those puppies to get below 153.05, because they'll be in big trouble if they do that. That's the main thing that you want to keep in mind. So those are a few things that when you're trading, it's not about how much money you make. It's about how much money you don't lose. And that's the whole key to, why we're watching these things. So let's remind ourselves that these markets do go up and down. I felt really bad yesterday because I had liquidated the long gold position that we had held at 1730, and then of course the Fed came out and ran the market all the way up to 1756, almost making the ABCD pattern there at 1761. And then of course the market's broken down. We broke about $30. We got down to what did we get down to about 17 or 18 today, and then we rallied up to 1734. So we're going to review the gold here a little bit later, but right now we'll just keep an eye on what it's doing. We're standing flat, waiting to see how the cards are dealt here the next day or two. We will not be doing anything in the gold market until Monday for sure. We want to give it a time to do some more swings. It might get up to that 1761. We'll have to reevaluate it, but right now we're just going to wait and see if we have that thing moving, and we'll be in pretty good shape here. So the main focus today is to keep an eye on these Treasury bonds, because that is a solid 3 drive pattern. It certainly might not work, but boys and girls, you just can't get. The only thing that would make this any better is if you had perfect time symmetry in the CD leg. But the difference is well, you really don't, because you're off by about a week, and because you came down went from the 26th down to the 5th. That's 4, 5, 9 days, and this one went from 11. Wow. Yeah, one would be, wow, it's today. It does have good time symmetry. What am I talking about? Yeah, that's not so bad. It should hold 153. I mean, if it doesn't hold 153, it's lights out. And as long as, so we'll see. All I can tell you is that it's just a pattern like anything else. Sometimes they work, sometimes they don't. That's basically it. If you have any questions, folks, it's 877-927-6648. And we have Tim Boss coming up at the break, and he's got some very good information. He's got a nice slide presentation for us, and we'll see how that works. We're hoping to have Stan Harley tomorrow. Depending upon his schedule, he'll try to be with us. He's the one who's been perpetually bullish for a long time, and will be. I don't use Fibonacci timing the way that people use it because it's very elusive. I just use simple time counts and keep it as simple as possible. If you use Fibonacci timing, the problem, Bilal, is you get into a situation where they keep expanding and get so many lines and numbers, you just get darn confused. If you stick with A, B, C, D, and you get to the D point, you know exactly where you're supposed to be. Make sure you're not trying to catch a falling knife. Put your stop in and let the cards be dealt. We'll be right back with Tim Boss, Financial Cycles Weekly.
Hi folks, this is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. Tim's not quite ready. I wanted David White has asked me to review the bonds, and I should, because it's that important, I think. But let's take a quick look here. We were talking about the notes to begin with. You'll notice here, this has not been updated, folks. I did this Saturday morning, and it looks like there's a 3-drive pattern. You can see it there where it says very important support. I don't know where the notes are, but I know they're down in below, a whole lot lower, making that 3-drive pattern. That's point one. Okay. Point two is if we look at the bonds on the really, hold on one second here, boys and girls, get the bonds up on the long-term basis here and see that. You'll see that we are in a cascading market to the downside. We're below the 61%, but this is a continuation chart, so you're not actually sure where it is, because you can see the ABCD from 2009 to 2020 didn't quite, it went to 190, 191, and we were looking to go to 189. So that could miss it a little bit. But the main thing is you can't trade off a weekly chart with bonds, because you're darn the stops are too big. So that's part of it. Now, the second thing that we want to take a look at is I talked about this just a few minutes ago, but we need to look at it again. Here's the Treasury notes as we stand this morning. You'll be able to take a look at these little puppies right. Whoa, hold on just a second. Right here. All right. And what we're going to do now is we're going to blow up the last week and a half so that we can see what's happening with the Treasury notes as far as what the pattern looks like. And I'm reviewing this because it's this important, folks. This is a big market. This is 6 times, 7 times bigger than these futures markets for indices. This is where the big boys play. And there you can see we're looking for 132.71. We've been to 131 or 133, I believe, which that's pretty close. And as a matter of fact, you notice that I could be off by just a little bit. I don't know. The one I'm not off on a little bit is the Treasury bonds, because that's the one that people trade the most. And if we take a look at that Treasury bond, just get it up here. This is what keeps me young, are these kind of patterns. They drive me nuts, but they keep me young. Anyway, this is it the last 3 weeks. It's an ABCD down. If you want to defy human nature, do the work yourself. You take B plus C minus A, and that gives you D. It's a mathematical formula that if you run 10,000 samples like we did in the Floor Traders Handbook and add harmonic numbers to it and a few other things, you're going to come up with some ideas that, this maybe does work. I don't know. But the probability will flat out be on your side. But below 153, it's there's an old saying that vaya con Dios means goodbye in Spanish. Hasta luego means goodbye in Mexico. And what's the other one? It was from medical school. And a busted coronary artery means goodbye in any language. And that's what you would get below 153 would be goodbye in any language. You do not want to be involved with it at that level. It's that close, folks. That's all I can mention. Just like we were looking at in some of these other things that we were watching, sometimes they work, but when they do, that's when sayonara is goodbye in Japanese. You're absolutely correct. And okay, let's move on to another question that someone had. Oh, that was about the euro. So give me a second here, and we will get the euro up, so you'll be able to take a look at that one too, because we had a very, very nice trade in the euro into that report. We had a nice lead into it. As you can see, we were buying it down there at that lower level there. You don't see the lower level because it did get to that 188.50, I believe, whatever it was. Yeah, 188.50. Then we rallied all the way up to 121. We haven't really done anything in the euro other than that big rally into that the Federal Reserve thing. So that's pretty much what we're looking at. This trend is still down in the euro. That was a 1 or 2 day rally. We locked in a profit in that just so you wouldn't lose anything, and you make $400 if you're right. At the worst scenario is 400, and if you were smart enough to get out on the big rally, that would have been worth well over 1,100. But it happens so fast you can't even move. You can't even move up and down that quickly sometimes. So that's the main thing to take a quick look at. If you have any questions, folks, it's 877-927-6648. update regarding the grain markets, folks. We are myself and Rich Anderson and Cy Monley and also Mr. Z is going to be kicking in some ideas. I think we're having a nice correction in the grain markets right now, particularly in wheat. We're not seeing it any in soybean oil yet, but we are seeing it in soybean meal. We're seeing it a little bit in the corn market. And if we get a good break here, I'm talking about another 40 or 50 cents, we're going to have a situation where we're going to have a really good chance to pick up some good value with the pattern matching. And that's what the whole situation is all about, because the fundamentals, the supply demand that they talk about in the grain markets are still very, very bullish. We will not have a crop here in the United States until November, and then we got to go all through the planting season, which is hectic enough with weather and everything, and then we got to go through the growing season. So we're going to have some really good volatility, and we're having already great volatility in the stock market, and hopefully we're going to see some in the bond market too. So that's why I wanted to get to this hour of the day to do this, because it really helps me a great deal early in the morning to line everything up, because it gives me a spot where I can actually go in and analyze where I think the best opportunity is for buying and selling, and that's what you try to do, is keep your risk absolutely as small as possible. All righty. Now, we had one other question that was from yesterday, and that was about the NASDAQ. I wanted to get that up here because this is another one that's very important here. This was the one from the overnight, the weekly newsletter, and you'll notice the blue line there where the right shoulder is. We hit that 3 times, folks. It did not go above it yesterday with all the craziness, with the new high in the S&P, explosive move in the Dow. The NASDAQ did not get above that 61% retracement, and so that head and shoulders is still in. Now, if it does, if it gets above that 13,300 level, then all bets are off. That thing will no longer be, well, you could go all the way up to 135 to be a 786 retracement. It would still be a head and shoulders pattern, but that's a big amount of risk. So shouldn't have got above the 160, the 61% retracement. And whether that's going to continue going that way or not, I really don't know. So those are a couple of things that I'm watching. Regarding those grains, folks, the grain markets are really great to trade. I cut my teeth on the corn market back when corn was trading. You wouldn't believe this. The weekly range in corn when I was trading it back in 59 and 60 was about 7 cents. About $350 was the weekly range. The margin to trade it was $100. The main part about trading, you had to be at least 21 years old to do it, so you had to lie about your age to get the account. But remember, you had to call into a broker and all that other stuff, so that was neither here nor there. So we'll watch these things as we move on here. Now, I wanted to bring to your attention one other thing that we're talking about here, and that is this dollar index. Give me 1 second here, because this is important, what happened in the dollar index here over the night. And I got the chart, and if I've lost it, I'm going to shoot myself, and so the bullets are still out of the gun. We'll be right back with the dollar index. Stay tuned.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Okay, folks, I win a prize again. I was the one that's responsible for Tim not being on the show. I didn't alert him to the fact that I moved to noon instead of 9 o'clock. So we're going to have Tim on tomorrow at 12 o'clock. So sorry about that. Anyway, let's move on here. Steve Rhodes has just posted something, and he's a pretty smart dude because he's always in the top of that Timers Digest stuff. But he said there's great support here on the bonds at the monthly level of 153.27. The low's been 153.05, I believe. So I have to agree with that, Steve. And it does have that really nice three drive to a bottom pattern that I particularly like, because that's a good pattern for it predicts somewhat, but boy, it sure tells you what your risk is. And that's the main thing to try to remember when you're seeing some of these things unfold this morning. Okay, now I would like to mention to you about the chart that I just posted, which is the U.S. dollar. Folks, we have been at the 382 level now for 2 weeks. That is tremendous support. That tells me that the euro is getting ready to go lower. That's why, we had that big rally up there yesterday. You follow it up so that you don't, give a lot of that back. And that's what you try to do on a Fed day, is to lock in some profit. And that's what the whole game is all about. But right now, it looks like it's going to be some really strong support there at that 91.20 in that dollar index. So pay very, very close attention to that one, folks, because if that thing takes off to the upside, 92.40, it could be related to the fact that maybe our bond prices are so low that people are going to start, jumping in at 2% bonds. I can't believe 2% bonds. I've lived with bonds from 5% to 16%, but to see them at 2%, absolutely, blows me away. Someone asked a question about real estate here in Tucson. Yeah, it's going crazy. Sarah showed me a little piece of land with a house on it that's uninhabitable. Even mice won't live in it. And it's very, very small. And the person bought it just a few months ago for $100, and now he's got it $100,000. He's got it listed for $185. So things are getting a little frothy here. Maybe the froth is just starting. Who knows? We've seen these things go crazy before. All righty. Now, the question, hold 1 second. I wanted to bring up one other chart that I think is pretty important. Hold on 1 second here. And I think it's very, very important. And that is the old Where is it? Where's that British pound? There we go. Here's that British pound. This one has been very good to us, and we are waiting now to get another signal up in here. We were able to take quite a bit out of that on the downside from the 141 level all the way down to 138, and we're waiting for another signal here in the next few days to see if we can get in with a very, very low risk. The secret to this, folks, is how much you risk. It's not how much you make. It's very, very important. I've shown that slot machine, whenever I do a webinar. In fact, I'll be showing that slot machine today on the Denver Trading Group, and I probably have, I know I have at least 50 students that are going to be in that room today, so we'll see that. Bylaws asked me to check the pound on the guard. Let's do that right now because I've been so busy. I haven't really checked the pound. So if you give me 1 second here, I will get the old British pound up here, and we will take a quick look at it. Where is it here? There it is. Hold on. Let's get it up here, and we'll be able to see it. There we go. Not yet. No, it's getting close, but no cigar yet. The problem is, you see, we've got to get it a little bit higher. Hold on 1 second here. There's an ABCD here, but the trouble is it's at the same level. So let me draw it in here. I got to put the retracement levels in first because you don't want to get involved with that because they're right at the 50% level. But let me draw the Gartley in, and that's what we're waiting for here, is to draw the ABCD in here, right here. Now we've got it. Let's get this up here, and you'll see it. Now you've got a Gartley set up here. And we'll be happening. That was a very well. The crude oil was okay. Thank you, Maria. I appreciate that very much. But I know you're doing those things yourself. You do a great job with the NASDAQ and the S&P. So, what's interesting to me, the fact is the Dow Jones made another new high today, and you couldn't hardly make any retracement at all in the NASDAQ or the S&P. I mean, that to me was a big surprise, but I get surprised a lot. But anyway, looking at this British pound here on the hourly chart, you've got a really nice shot at it, but it's got to get up about another 80 pips, up to that 40-60 level. That's 120 pips, so that's nothing in the pound to make that. And if you looked at it closely, let's just do that right now. I'll just draw those in so you can see how I do this when I'm ready to look. We just had a really nice 135 pattern come in here, and now you'll see. Let me drill the 135 pattern in because this is something that I'm going to be doing all this live, folks, all day. Sometime at the end of the month or early April, I'm going to do another live day trading system that we do a couple times a year, and that'll be a lot of fun. But let's take a look here now at this updated chart of the British pound. Now you see the trend line that I've got here. That's the 135 pattern that is formed. You've got some really nice symmetry. You can see the ABCD up there at point D. You see the pullback here. That sets up a price objective of 140.60. So there's your best shot. You've got three numbers up there. You've got the 61% retracement. You've got the ABCD, plus you have the 1.618. That's exactly what you look for. And why is that important, boys and girls? As Mr. Rogers would say, in the neighborhood, we are in that neighborhood, and the neighborhood is right here. Let's get it up and take a look at it. We have Michael on the line from Toronto. Michael, how are you?
Yeah, hi there. In lieu of Tim Boson not showing up for your show, I decided to call in and ask about the direction of the Canadian dollar. The
direction of the old Canadian dollar, that puppy is
right,
still...
the loonie.
The loonie. That's right. Let's get it up here.
Why is it so strong? And I mean, I know it's a petrodollar, but I mean, realistically here, do you think it can go to parity?
No, I don't think so. But is it above one? Is it above 81, Mike? That I don't know. The last time I was looking for it to get to almost 81, and wow. I don't know whether it got there today or not. The last price I had was 180.23, but I'm not sure whether it got to 181 or not. I'm not involved in that. I'm involved in the euro and the dollar index, but not in with that one. So
okay, so you don't have a chart in your folder that you can just
yes, very good. Gee, maybe I should use some of this stuff, right? Hold on a second, Mike, and I'll get this up here for us right away here. Well, this is the future. So let me do it with the Forex, because the Forex is much easier to work with, I believe. Let's get that set up here.
It's a commodity-based currency, correct?
Yes, it is. Yeah,
you know,
and
we got commodities
we've reached
here. We got high lumber prices, right? So I mean,
we only got.
Could we have maybe some kind of a? I mean, if the U.S. dollar plunges, do you think we could see sometime this summer?
Oh, sure, very easily. Yes, very easily.
A punch out to parity. I mean, even what would happen if Trudeau loses the election?
Trudeau, is that the guy up in Canada?
Yeah, Justin. Yeah, say he loses the election, and we have a new government. I mean, would that be stronger for the dollar?
Boy, Mike, those are questions that are way over my pay grade, buddy. But I'll look into it for you.
Okay,
Sorry.
I'll call in whenever Tim Boson never shows up. Okay.
Hey, it'll be tomorrow.
Okay, thank you.
Thanks a lot, Mike. You bet. Bye-bye.
Your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Okay, we're back, folks, and I believe I posted a chart of the crude oil here. Let me double check. Did I do that? Nope, I didn't. Let me do that. I wanted to show you what crude oil is doing right now as we live and breathe. And boy, I tell you, these Fibonacci numbers don't work all the time, but boy, when they do work, you see the high today in the S&P that Mr. Z posted. Here is what the prediction is supposed to be for crude oil. So pay close attention to it here, folks, over the next half hour, because we should be reaching a bottom. We're at 61.09 now. My projected low today was 61.61, and we're quite a bit below that. I have be interested in buying it probably in about 20 or 30 minutes, but it's at a very interesting level here. You can see that the last 4 or 5 hours have been following quite nicely. Doesn't always do that, but when it does, that makes you feel a lot better. But you can see when you're looking at this 3 drive to a top pattern that we had way back about a week or so ago, and the whole world wanted it. Now look where we are. We're down better than 10% in crude oil, and we are dropping like a falling safe. We checked the last low from the low back at 59 up to the high at 68. Guess where we're setting to now at, boys and girls? Take a look. You can only get this here at TFNN. We are setting, we just unset it, right? 6,100 is the 78% retracement, folks. But that wide bar down like that, wouldn't touch it with a 10-foot pole. I actually wouldn't. We exited the short positions we had at, like I mentioned, 62.01. And so we're waiting to see what happens. We're going through the 786, as you can see here, melting down quite a bit. So we'll watch it. Remember, folks, we're going to try to have Tim on tomorrow. My fault on that. 877-927-6648. Live every day in an attitude of gratitude, and may God bless.